Hello everyone, I hope that you guys are doing great and I hope that the things that we have covered up within the previous lecture have been properly prepared by you. If you remember within the previous lecture we did from chapter number 6 audit planning, we covered up the audit quality, how quality is maintained during the audit, what are the important things that you have to remember for the purpose of maintaining quality during an audit. Just a recap, these were the major two things that as an auditor, as an audit firm, we have to do to ensure that every single audit that our firm is performing at the moment, those are done properly and the quality of the audit is maintained. Within this lecture, we are going to move towards the kit and we are going to solve some questions from the kit, from your Kaplan kit specifically, about the way audit quality is maintained during the audit. Now, I told you about this within the previous lecture as well, that quality is a subject. Audit quality is a subject that is technically asked by the examiner within your questions as well. Audit quality, you can always expect that there is more than 50% chance that the examiner is going to ask your question for approximately 6 marks, and this will be linked to the scenario. A story will be given to you, a scenario will be given to you, and from that scenario you will have to identify in which areas the audit team was not able to properly maintain the audit quality, which would have reduced the audit quality, the issues which would have reduced the audit quality during the audit. Now, always remember, this question will be always about post issuance review. This means the audit has been completed, the audit is now done, there is nothing remaining within the audit, and as an auditor, as a student, now you have to identify what was done wrong during the audit, which would have reduced the quality of an audit. Now, how to solve the exam questions of quality deficiencies within your AA exam? Always remember that first of all, these are the things that you need to remember. Wherever you find out about these things, it means that that is the specific place or that is the specific point within the scenario where the quality would have been impacted for the audit. Example, these 5 points which I have written down are the ones that are important for you for the purpose of your exam. Anywhere you find out that the team members were not the right people according to the risk, for example, revenue had a high risk, junior person was allocated to audit the revenue. This means he would have not properly identified the risky areas from within revenue. Even though you said that revenue had a high risk, we knew that revenue has a high risk, but he would not have performed appropriate procedures which would have reduced that risk, which would have identified that what is the exact amount of misstatement within revenue. Where there is a high risk, this means particularly a person who has a lot of experience, more than a junior team member, should basically audit that specifically high risk area. Number two example that you can find within your exams is communication between the team members. If you ever find out that team members within themselves did not communicate, for example, revenue team members did not communicate with the receivable team members, this means that any of the misstatements that would have identified within revenue, they also impact receivable as well. If they did not communicate, this means that on only one place, only one place, the risk has been identified, the misstatements have been identified. On the other side of the impact, the other side of the double entry, the risk was not identified or the misstatements were not identified as well. So this would also have reduced the quality of an audit. Proper supervision and reviews by senior as well. If whenever in your scenario you find out that there was no one to review the work of the junior people, there was a reviewer but he did not give enough time to properly review the work during the audit, and someone was not supervising the audit team, this means that they would not, although they would have worked, but because there would have been a lot of issues within their work, and if no one was supervising their work, no one was checking out whether they are doing their work correctly or not, this means specifically that there might have been unidentified issues in their work which you would have skipped out on because no one reviewed their work. This second last thing is EQCR is required. Always check out whether it is a listed company or a non-listed company. If it is a listed company, if there is public fund involved in that company, we just read within the previous lecture as well that EQCR is required in that case. Engagement quality control review is required in that case. A high risk client or a big company which you are auditing, in that case an EQCR must be allocated. If in the scenario it is written that no EQCR was involved, this means that there was no second partner who properly reviewed all the audit work. This means a lot of the issues might have gone unnoticed. This would have reduced the audit quality as well. Experience in such industries. For example, you get a new audit client who is from the education industry. Let's say Wisdom School of Accountancy or me teaching you. I have just hired an audit firm to audit my company. Now, for example, the firm that I've hired at the moment, they have never audited a company which is an educational company. So how would they identify risk in a company? Wouldn't it be difficult for them? Because even in the audit risk question, we always said this: if an audit firm or the audit team does not have enough experience in auditing same types of companies that they are auditing right now, there is a high risk, there is a high detection risk that they may not be able to identify risky areas and misstatements within the financial statements. So having an experience in the risk, whenever you see within the question that the audit team or the audit firm did not have enough experience in working or auditing the same type of client that you are auditing at the moment, this means that a lot of the issues might have gone unnoticed, which would have reduced the audit quality as well. Wherever these or other things don't feel right, this means that the quality of the audit would have been impaired because of it. So wherever you read in the question because of which you think that the quality would have reduced during the audit, always create a issue for it. Now, the way you solve your answer within your exam, again, you will be given different stories within your exam questions. I'm talking about the long questions, section B. Out of the story, by reading every single line, just like audit risk, just like code of ethics, just like code of corporate governance, the way we solve the questions there, same as that, you will have to identify areas where the audit quality might have reduced during the audit. This is a post issuance review as well. So the audit is completed. You just have to identify where a high risk would have been created, or sorry, where the quality of the audit would have reduced. So first of all, you again make a table within your answer sheet. On one side, you will always give the heading deficiency, and on the other side, you will always give the heading recommendation. Within the deficiency section, the first thing that you will do, the first paragraph will always be that you will explain the scenario in your own words for what you're about to create the issue for what you're about to create the deficiency for. So deficiency basically means things that did not go right during the audit. So things that did not go right, when you identify it from the scenario, first of all, always try to rephrase it into your own words and write it down within the paragraph number 1, so that now the examiner would know what you are about to provide an explanation for. Don't make it difficult for him to first of all read the answer and then understand that what the student is writing for. No, don't do that. Simply write down in a few small words, explain in your own words what you're about to create the risk for. The number second paragraph would always be this: why it is wrong and what would have happened because of this deficiency which is wrong. So from the scenario, let's say you have identified that a junior team person was allocated to audit revenue, and revenue had a higher risk. Now you have to explain that why he would have not maintained quality. You would have to write down essentially that he does not have enough experience in auditing companies at all, let alone you're giving him a high risk area to audit at the moment. Because of this, he might have skipped out on a lot of different deficiencies, a lot of different misstatements that might be hidden within revenue, and he would have not performed the correct testing and detailed procedures to identify the exact amount of misstatement within revenue, which is why the quality would have reduced. So this is the explanation for every single area you identify. You will have to explain why are you stating that the quality would have reduced in this case. You will have to explain that. Then you will also provide a recommendation. What did I tell you within the previous lectures about post-issuance review? I told you that post-issuance review or cold reviews are performed when the audit is complete, the audit report is given, the file is now closed, but the audit firm basically wants to learn from their past mistakes and make sure that they do not happen within the future as well. So within the post-issuance review, whenever a deficiency is identified that this is something that the audit firm or the audit team did not do correctly, in exactly after that deficiency, you give a recommendation to the partners, to the audit firm in itself, and you write down what was the right way to do it. So any deficiency you have identified, let's say you identified that revenue was allocated to a junior person. What was the appropriate thing to do? The appropriate thing was that if revenue was identified as having a high audit risk, then a senior team member should have been allocated to audit revenue, and even his work should have been reviewed by a senior person within the audit team. So tell the examiner what should have been done, what was the right way to do it in a past tense, like what should have been done during the audit to make sure that this quality reduction shouldn't have occurred. Now let's move towards the kit and let's try to do some questions. Moving towards the exam kit, the first question of quality which we are going to solve is again Green Corporation. If you remember, this is the same question that we have already attempted for audit risk as well. If I move towards the requirement of this question, If I move towards the requirement of the question, and let's come towards requirement number D. What does the requirement D demand? The examiner states, identify and explain three quality management deficiencies in the approach adopted by Teal and Corporation. Teal and Corporation is our firm. This is in which firm we are, and provide a recommendation which should have addressed each deficiency to ensure compliance with quality management requirements. So, in essence, your answer would be to identify the deficiencies, explain them in the same way which I have told you how you have to do it here, and then you will have to give an appropriate recommendation what was the right way to do something. Let's read the question now. Again, as always, I've already written down the answer for you guys. We will identify the deficiencies, I will explain them one by one, and then we will come towards the answer and discuss what I have written down. Let's come towards the scenario first of all. So if I come towards the scenario, what does it say? This scenario is related to part D, by the way. Let's read it now. It is now 2nd of November 2015 and the audit of Green Corporation has been completed. Okay. The auditor's report was signed in October and in line with Teal and Corporation's quality management procedures for new clients, a post-issuance review has been carried out. During the review of Green Corporation's audit files, the engagement quality reviewer noted the following. So basically, this is the introductory paragraph in which we are only given information what are we going to do about, and these are the remaining paragraphs in which there would be hidden quality control deficiencies that have happened during the audit. Let's read the first paragraph, this one. The members of the audit engagement team who carried out the audit of Green Corporation had previously audited educational organizations, not retail or manufacturing companies. Now, what is Green Corporation? What is the industry of Green Corporation? What is the business of Green Corporations? Some of you who have listened to the previous question in which we have discussed audit risk already know that what is the business of Green Corporation. It is listed here. Green Corporation sells a variety of plants, garden equipment and garden furniture to wholesale customers and to retail customers via network of stores. So they have different cafes, stores through which they sell to different types of customers. So they are a type of retail company. And the people who were assigned to audit this Green Corporation do not have any experience in retail or manufacturing. Green Corporation is both a manufacturing company, they make the furniture and then they sell the furniture as well. So they are both retail and manufacturing company. And the audit team you assign to this specific audit does not have any kind of experience in auditing a retail or manufacturing company. They only have experience in auditing educational organizations. So this specifically means that the team does not have enough experience in auditing the kind of companies which Green Corporation is. So because they don't have enough knowledge of this industry, how would they have identified the correct risks within the financial statements? And if they would not have identified the correct risks within the financial statements, again, they would have not properly done the test of details as well to identify the exact material misstatement amounts within the financial statements as well. So in essence or effectively, this is one of the reasons which may have reduced your audit quality, that you did not assign a team which had experience in auditing retail or manufacturing companies. Because of this, these people would not have identified the correct risky areas because they don't have experience to this industry, and they would have also not identified the correct amounts of misstatements that would have occurred in this scenario. Let's come towards my answer. The first thing which I would do is always in the first paragraph explain the issue in my own words. So by explaining, I mean simply write down the audit team which was assigned to the audit of Green Corporation did not have enough experience in auditing similar companies to Green Corporation. So this is what I have written down. The audit team which was auditing Green Corporation had no experience in auditing Green Corporation industry. So this is just an introduction. Reading this, the examiner would automatically know that this is what the student is about to write about. So automatically he would know what I'm about to write upon. Instead of directly moving to this, first I have given an introduction. Now let's move towards the second paragraph. What did I have to write about in second paragraph? I have to explain in my own words what was wrong, why was it wrong, and what would have happened because of it. How would have the quality been reduced because of it? So coming towards my answer, now I have to explain that assigning a team of audit who had no prior experience in auditing similar companies to Green Corporation, they would not have had enough experience of how the financial statements are made for this type of industry, what are the things that are important in the financial statements for this type of company. This means they would have impaired the quality as well. Let's read the answer. Due to the above, audit team may have missed significant areas where risk might have been which only a similar industry experience audit team could have identified, which may have reduced the audit quality. So in short, if you would have assigned people who would have had similar type of experience, they would have been able to properly identify risky areas from within the financial statements. Because in a retail industry, I'll give you an example. In a retail industry, in a manufacturing company, inventory always has a very high risk of material misstatement, always. So these people have been auditing educational institutes. In educational institutes never have any kind of inventory. If these people do not have enough experience in auditing inventory, how would have they identified that it is a high risk here? Complex areas would have been missed by this team. Now, what is the recommendation? What should have been done? What was the appropriate way to do it? The appropriate way was the firm should have assigned people who have experience in auditing retail or manufacturing companies. This is the recommendation. Let's read the answer. The audit firm should have selected an audit team which has experience in auditing similar nature of companies as Green Corporation. This is the recommendation, straightforward and simple. Coming back towards my scenario, I've already identified one. I only need to identify three deficiencies within the audit, within the quality. Let's read forwards. The audit engagement team partner held a planning meeting with the engagement team. So basically, before the start of every single audit, once the planning has been finalized, and planning includes identification of risky areas from within the financial statements, preliminary analytical procedures, audit strategy, audit risk. Once all of this has been finalized, code of ethics as well, then senior people within the audit team all and the junior people within the audit team, all of the audit team has a meeting. In this meeting, direction is given to the junior team members, direction is given by the senior team members to rest of the audit team, so that the rest of the audit team knows what do they have to do, how these are the risky areas within financial statements, and these are the responses that have been given to the audit team. Same as the case for audit risk question, the risky areas and the responses. This is what is discussed within a planning meeting. So let's read forward. However, several junior team members were unable to attend due to a training course which was held on the same day. No additional briefing on key audit risk associated with Green Corporation was held for these team members. So basically, here there is also a hidden risk which would have reduced the audit quality overall, and that is that this if the partner was holding a planning meeting, the junior team members should have attended this meeting, because they would have known that what are the risky areas within financial statements and how we are going to do test of details against them. If they did not attend this meeting, then they do not know about the test in details. They do not know how they have to audit them, let alone they don't even know about the risky areas of the financial statements as well. So because of this, they would have missed many different things out, which would have reduced the audit quality overall. So either, now coming towards the recommendation, either a separate meeting should have been held for these people. We will discuss it later on within the answers as well, that either a separate meeting should have been held for these people, or either the training date or this planning meeting date should have been changed, so that all of the people should have been able to join this meeting. Now coming towards my answer, first of all, I will again do a simple identification from the scenario. The junior team members of the audit team did not attend the planning meeting with the engagement partner. So this is simple identification, nothing extra. But now I have to explain in my own words that why was it wrong and what is the quality, why would have it reduced the quality of the audit. Why would have it reduced the quality of the audit? Because these people did not attend the planning meeting. Because of this, they do not know what are the risky areas within financial statements, and they don't even know what are the responses against them, what testing in detail they have to do against these risky areas within the financial statements, and they would not have done the proper testing in detail, which would mean they have not properly identified the exact amounts of the material misstatements within financial statements, which would have reduced the audit quality as well. During these meetings, a lot of risks would have been discussed and direction would have been given by engagement partner on how to perform tests on these areas. And without attending the meeting, the junior team members would not have understood that these would not have understood these and would not have used the direction during the audit, which would have reduced the audit quality. All right. Now coming towards the recommendation. The appropriate recommendation is, in this case was that either the planning meeting and the training date was on the same date. So either you should have changed the planning meeting date, or either you should have changed the training date for these junior team members. That is also a proper recommendation. Or you can also write down a recommendation that the partner should have had another meeting with the people who missed out this meeting, so that it could have been ensured that everyone has knowledge of this meeting, everyone has knowledge of the things that were discussed within the meeting. So the appropriate recommendation written down here as well is the same. Either the training date or the planning date should have been changed so that all the team members could have attended the planning meeting. Additionally, now this is the second recommendation. Additionally, even if the planning was missed, an additional date should have been kept to perform a planning meeting only with the absent team members. So they would have known what risks were discussed in the initial planning meeting. Coming back towards the exam question, let's read forward. The audit supervisor was absent due to illness during the last 2 weeks of the final audit. Okay, so basically the supervisor was absent, and the work of the supervisor is, if I go towards my notes as well, I have told you this again and again, that supervisor on top, there is a partner, then there is a director within the audit team, then the senior manager, then the manager, then the assistant manager. Below him is the supervisor, and below the supervisor is all of the audit team of 20 or 30 different people, depending upon the audit client. If it is a big audit client, then more people will be assigned to the audit team. If it is a smaller audit client, then less people will be assigned to the audit team within the total audit team. Now, if the supervisor is not present, this means that there was no one to supervise this audit team. This audit team would have had a lot of issues in the final week of the audit, final 2 weeks of the audit. This means a lot of things would have come up during the final 2 weeks. The final 2 weeks are very hectic for an audit. There are a lot of issues that are identified and discussed with the management, that you have to correct this and that, this and that. If the supervisor was not present, then who was supervising their work for the final 2 weeks? Plus, if they would have had any kind of issues that management is not correcting this or that, management is not correcting these misstatements within financial statements, their first point of contact was supervisor. If he was not present, who did they contact then? That is another issue. So, coming back towards the question, let's read forward. The audit assistants continued their work, but no other senior team members were assigned to Green Corporation's audit. This means that there was no supervisor, no one else reviewed their work, no one else supervised whether they were doing their work correctly or not. This means that many of the issues would have gone unnoticed, because for the final 2 weeks, there was no one supervising the work of these audit assistants, and there was no one who was reviewing the work of these audit assistants. All right. So this would have reduced the audit quality overall. Coming towards my answer sheet, simple identification within the first paragraph, the supervisor was ill and hence absent for the last 2 weeks of the audit. Then I have to explain in my own words how it would have reduced the audit quality. I have explained it. Let's read it. Majority of the issues would have been identified and aggregated at the final 2 weeks of the audit. This means that the audit team would have been summing up all the issues and made sure that these were corrected before the audit report is given. And in the final 2 weeks, when they had to discuss all of these issues with someone, there was no one present within the audit team. So they had themselves, and they had to decide themselves what do they have to do with these issues. So, and the fact that supervisor was not present means that the audit team would not have had anyone to discuss these issues with. Additionally, the non-presence of the supervisor also means that the supervision of work of the audit team would have also been impacted, because of which many issues would have been ignored by the audit team, hence reducing the audit quality. This was the first stage, identification of the deficiency because of quality control. What would be the appropriate recommendation in this case? Always remember that whenever you read the scenario, the opposite is always the recommendation. Like, for example, if I'm saying that my supervisor was not present, I can write down a recommendation that he should have been present, but I can't write down that this is not possible. If he was ill, he couldn't be present. So I can't simply write down that he should have been present. But I can also write down that the audit firm should have assigned someone else as the supervisor of this team for the final 2 weeks, because the original supervisor was not present. He would have reviewed everyone's work. He would have supervised everyone's work. He would have been the one with whom the audit team would have discussed all the issues within the financial statements that they aggregated. So this is the appropriate recommendation in this case. The final 2 weeks of the audit, in which time the supervisor was absent, another supervisor should have been assigned to the audit team That's it. That is the appropriate recommendation in this case as well. That simply another supervisor from the audit firm should have been assigned. An audit firm has so many different supervisors. At least 40 or 40 or 50 different supervisors are present in every single location of the audit firm's office. So someone should have been assigned who is a supervisor to look over this audit for the final 2 weeks, because the original supervisor was ill and he was absent. Moving forward, now always remember that we have identified 3 different deficiencies as of yet. This means if I was a student of AA and going towards my exam, I would have simply skipped out on the remaining paragraph that is remaining. On the paragraph which is remaining at the moment, I would have skipped out on it and simply moved towards the next question, because time saving is very important for me if I am an audit student and trying to give the audit exam, the AA exam within the actual practical exam. But still moving towards, this is a class, still moving towards the next paragraph. Let's read what it says. Due to the audit supervisor's illness and absence, the audit of intangible assets was reallocated from the audit supervisor. Why? Because the audit supervisor was ill, he was not present, to a junior member of the audit team. So the intangible assets audit was transferred to a junior team member. Originally, supervisor had to do it, but now it was reallocated in the final 2 weeks to a junior team member. First of all, this is wrong. Junior team member does not have enough experience to audit such an area which requires a high judgment. Development and research and development costs in itself are very judgmental areas. How can you assume that a junior team member was able to do it? First thing, who had never audited intangible assets before? There it is. There it is. The final punch, that he has never audited intangible assets. He is a junior team member, does not have enough experience in auditing intangibles. Wait a second. All right, now moving forwards towards the final one, it says that due to audit supervisor's illness and absence, the audit of intangible assets was allocated from junior team person to the from a supervisor to the junior team person. As we were already discussing regarding this, it was that you cannot simply allocate some of the work to a junior team person. You have to analyze whether the junior team person will be able to even do it or not, whether the junior team person will be even able to properly do the required testing of detailed procedures, or required testing which should cover up the risk. By covering up the risk, we mean that whether he would even be able to identify the actual amount of material misstatement that is hidden within intangible assets. So you have to properly allocate the work. And this is all because the junior team person, the supervisor, was absent at that time. And the senior people within the audit team, obviously, if the supervisor wasn't present, if the supervisor was not present, there was the assistant manager, the manager. Obviously, assistant manager would have decided who is going to audit intangibles now. Why did he select that a junior person would do it? Why? That is the question. He should have selected from within the audit team, he should have selected someone who has more experience, someone who has some sort of an experience auditing intangible assets. So identification is the first paragraph. Let's read the identification paragraph. This is the identification of the last one. The absence of audit supervisor led to intangible asset audit reallocated to junior team member who have never audited intangibles before. He has never done that. Now, why are we stating that this would reduce the quality of the audit? Because the junior team member would not have identified appropriate material misstatements within the financial statements relating to intangible assets. He would not have identified performed the required level of procedures to cover up the risk of material misstatement. This would mean that because the junior team member would not have had any experience in the audit of intangibles, he would not have audited the intangibles according to the requirements of ISAs and would have performed inappropriate procedures which do not cover the risk for intangibles. A simple line wherever the auditor is saying that we have not performed procedures which cover the risk, this means the procedures are not appropriate for the risk that is hidden within intangible assets, and the risk is there will be hidden material misstatements. What is the appropriate recommendation in this case as well? That what was the right thing to do? You should have allocated the work of intangibles to a senior person within the audit team. Even though if the AM doesn't want to do it, it's fine. If the AM doesn't want to do it, it's fine. It's completely fine. But from within the audit team, by the way, the testing has to be done by the audit team. Reviews are done by people above them. This is how the audit goes. They only review the things. If you had to select someone from the audit team, why did you select a junior member? Let alone why did you select a junior person who has never audited intangibles before? You should have selected a senior person who has an experience of auditing intangible assets. So coming towards my recommendation, audit of intangibles to a senior team audit. Apologies, even if the supervisor was absent, the person senior to supervisor would have allocated, the person senior to the supervisor, which is basically AM, should have would have allocated the audit of intangible assets to a senior team member, or a new supervisor should have been allocated so that he could audit the intangibles. So first of all, the recommendation is very simple. If the supervisor was not present, you should have allocated this work to someone else in the team who has an experience of auditing intangibles. But first of all, you would have tried to get a new supervisor for this audit team, and the intangibles would have been audited by him. That is it for this question. And we will now move towards the next lecture. We will discuss the other type of quality management questions that the examiner can ask within the exam. Up till then, if you have any questions, you can ask me upon WhatsApp. You can reach me out upon WhatsApp, and we can discuss the questions as well, the things that you don't understand. Up till then, take care, tata, and bye bye.